Hi everyone, back again for your revision videos. It is currently, I don't know if you can see that, 6:10 a.m. on Sunday the 21st of April, Easter Sunday, and at 6:10 in the morning I am working for you. So if I can be doing it, you can be doing it as well. Now this video, the first question we're going to look at is question 2b, which is group company corporation tax losses. So it says there are 4 companies, A, B, C, and D, that are all in a group relief for corporation tax and capital gains tax. No other companies are connected, therefore the figures must represent each company's taxable total income. D is the only company that pays taxes by instalments, and the requirement says what is the tax bill if A, no election is made, or B, all elections are made. Anything to do with losses. If you do not tell HMRC this is what I want to do, nothing will happen. They do not automatically surrender, they do not automatically carry back or forward. You have to direct what you think you want to happen with those losses. So in this first scenario, this is what will happen if we do nothing. So we have our 4 companies. A, B, C, and D. Now A has made a loss, so we don't put anything in here for them. And the companies have profits and they have gains. And the profits are 25,000, 90,000, 650,000. And the gains are only in company C, and there is 15,000. Now in this part, in the first part of the question, it says what will happen to the taxes if we don't make any election to HMRC. Now if we don't make any election, the fact that A made a loss, nothing happens. The fact that B had a capital loss, nothing happens. Those figures are ignored. So what happens is we end up with TTP of 0, 25, 105, and 650. And they are the figures that tax is calculated on. It's very straightforward. 19% tax for all companies, and that ends up as 4,750, 19,950, and 123,500. And that is it. The TTP at 19%, and that is what will happen if we don't say anything to HMRC. It is important to note there are 4 companies in this group. This is not part of the answer, but it is important that you understand it and know it. There are 4 companies in the group, so in order for the companies to pay their tax by instalments, we have 1.5 million divided by 4, 375,000. Any company with taxable profits over 375,000 will pay tax by instalments. Now, it tells us in the question, D is the only one in this group that does that. When we look at the second part, we understand why that becomes important. But that's the first part done. It's very straightforward. We would end up having carried forward losses of 190,000 in A and 10,000 in B. And this is what would happen if we didn't say anything to HMRC. They would just pretend it didn't exist. Okay, so now in the second part of the question, it says what would happen if we made the most cash efficient elections. Now the reason it says cash efficient is in times gone by when there was lots of different corporation tax rates, it would say tax efficient. And you would look at the percentage rate each company paid, and you would surrender the losses against the one paying at the highest rate. Now, as we know, all corporation tax is 19%. So there is no way of saving more tax. The total tax saved will be exactly the same wherever you put those losses. So all we can do now is look at the timing of cash. So we are told D is the only one which pays tax by instalments, which means it's paying its bill every 3 months rather than at the end of the year, like these two. So the end of the year is March. D would be paying some tax in June, in September, in December, and in March over the 12 months. The other 3 would just be paying their tax after 9 months and 1 day, so sometime around December. This means that if we're looking at cash efficient, we need to reduce the payment being made in June and September, because these are the ones which are before these ones. So the only way to reduce those payments is to reduce this tax. That's how it talks about being cash efficient. Reducing it in the only one which pays by installment means we pay our money later, which means we have more chance to do something with our capital before it's due to the taxman. And you never even know, you may be able to surrender losses. If we could get this figure down below 375, then it would no longer pay tax by installments, and all of that bill will be paid at the end. That's what it means when it says the most cash efficient way of saving tax. So, second part of the question, we still have the same 4 companies. The profits and gains are still the same. There is still nothing in A, 25 in B, 90 and 15 in C, and 650 in D. Nothing's changed there. What we're doing now is we are able to say to HMRC, we are a group. We have this 190,000 and we have this 10,000. We would like to do something with that to help ourselves. So, the first one to look at is the capital loss. Now, the capital loss can only go against the capital gain. We only have one place that can go. Either this carries this forward in B until it can use it against its own capital gain, or it must go against C. Now, in the current era of falling tax rates, it is best to use losses as soon as you can, because if the tax rates are coming down and you can surrender them now and save 19%, that's great. But next year it's going to be 18%. So if you save it for the future, you will save less money. If tax rates were going up, pay 19% and save it at maybe 22, 23, 24 in the future. We don't know. But at the minute, the trend over the last 10 years in this country is the tax rate to be coming down. Okay, so there is nothing to surrender in company A. There is nothing to surrender in company B. We've already said company C can take this 10,000. And for tax efficiency, all 190,000 here will go against D because it is the only one paying by installments. And we have nil, 25,000, 95,000, and 460. And I want to have done this line. It is as simple as it was before. Whatever that figure is, times it by 19%. Corporation tax at 19%. 0, still 4750 because there's no change in the profits. This one is now 18050 and the end one is 87,400. Now, 343, 147. About 148,000 is the total tax paid with no election, and around 110,000 is the total paid with the election. So we've saved around about 35,000 pounds in tax. They are not accurate figures. I've done them in my head. Do not message me and say I was 10 out in those. You can see for yourself what the saving is. That's it. This part of the question, that's it. Now, there is a third part to this question. I'm not going to do a video on it because it's a written part, so there's no technique for you to see. You have the notes, but I will briefly say, it says, what are the benefits of being in a capital gains group? Well, there are 3. Number 1 is you can transfer assets around the group as if you were husband and wife for capital gains tax. Any transfer of an asset within a group company for capital gains means that the transfer is deemed to take place at whichever price means there is nil gain and nil loss. That's the most simple way. Number 2, losses can be shared between groups. So in the past, You would have, as we've seen with the assets being transferred, company A makes a capital gain, company B has an asset it is about to sell, and it knows it will make a loss. Now, in the past, what it would do is it would give that asset to company A. Company A would then make the loss, and we can share them over here. Now, it became obvious that the only reason those transfers were taking place was for the losses to move. So it would be much easier for losses to move around. So now company A can make a gain, company B can make a loss. The asset does not have to transfer to company A. After the sale, the loss can transfer to company A. Now, the main difference about that is company B gets to keep the cash. In the old scenario, when the asset went across, they would then sell it at the loss, but they would get the cash. So let's say they bought the asset for 100,000, they sold it for 90, they've made a loss of 10, but somebody still has 90,000 of cash. So if we transfer the asset, the 90,000 of cash now is over here. By keeping the asset separate, this company gets the cash, which is why I wanted to sell it in the first place, but this company can use the loss, which means it's a lot less hassle. So that's why that was done. And the third benefit of being in a group is the group can claim rollover relief. The group is allowed to say company A sold an asset, but company B bought an asset, and the proceeds here were reinvested here, so we can roll that over, and same as an individual can as well. Now, the only rule there is that both companies must inform HMRC of the election being made, and the purchase must be made within 2 years of the disposal. So if company A sells an asset in 2019, and company B buys an asset in 2022 and says, oh, this was the proceeds of this. No, it wasn't. It's too long. But it can be in 2021 within 2 years. I doubt that money sat in the bank for 2 years, but hey, we don't make the rules. So that's the end of question 2. I will see you again for question 3.